Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's jump in. Benchmark indices on Wall Street declined 2% as growth worries resurfaced following weak signals from the manufacturing sector and moderating labor market. U.S. and global market indices plunged as growth-wary investors sold stocks, extending losses in the first week of trading in September. Non-farm payrolls in August accelerated from July but fell short of market expectations. The U.S. economy added 142,000 net new jobs in August, higher than the downwardly revised 89,000 jobs in July. Investors were looking for the non-farm payrolls to increase by at least 155,000 in August. The U.S. labor market is clearly softening after expanding by 200,000 jobs a month in 2022 and 2023, but the economy is still adding jobs and wages are rising. Over the past 12 months, wage growth accelerated to 3.8% in August from 3.6% in July, suggesting that higher income will stoke inflationary pressures in the near future. Despite the increase in wages, investors are still hoping that softer labor market conditions are likely to convince policymakers to lower interest rates later this month. In addition, the number of job openings declined 237,000 to 7.67 million, confirming moderating labor market conditions. The U.S. trade deficit in July widened to $78.8 billion, and exports rose at a faster pace than imports. Exports increased 0.5% to $266 billion, and imports advanced 2% to $345 billion, widening the deficit to the largest in 2 years. Higher imports of computer accessories, transport services, and charges for use of intellectual property contributed to the increase in imports. The deficit with China increased to $27 billion after exports declined to $12 billion and imports rose to $39 billion. Germany's goods trade surplus in July declined from a year ago after exports and imports fell over the year. Calendar and seasonally adjusted exports declined 1.2% from a year ago to 130 billion, and imports edged down just a fraction to 113 billion euros. Trade balance declined to 16.8 billion euros from 18.3 billion euros in the corresponding period a year ago. Exports to the US declined about 2% from the previous month to 12.7 billion euros. People's Republic of China fell 8% to 7.3 billion euros, and to the UK declined 2.7% to 6.4 billion euros. Import from China decreased from the previous month by 6.6% to 13 billion, rose 5.3% from the US to 7.8 billion, but declined 2.9% to 4.5 billion from the UK. In other economic news around the world, Euro area GDP growth in the second quarter was confirmed at 0.6%. France's industrial production declined 2.3%, and trade deficit narrowed to 5.9 billion euros after the energy imports shrank. China's official data confirmed the ongoing weakness in its manufacturing sector, and the service sector growth moderated in August. Japan's household income rose in real terms, and spending increased unexpectedly in August, driven by higher expenses for housing and transportation. Private consumption has been on the decline for more than a year in Japan until the second quarter, as rising inflation prompted households to tighten their budgets. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury hovered near 3.7%, and investors reaffirmed expectations of a rate cut after job growth leveled off and wage growth accelerated in August. Crude oil prices fell 5% to below $70 a barrel and declined for the fifth week in a row amid weakening demand growth outlook in the two largest economies, the U.S. and China. Natural gas prices in Europe fell 5% and backed off from their 2-month high of 39 euros per megawatt hour as traders debated the demand-supply outlook ahead of the start of the high-demand season. The euro edged higher to $1.12 amid rising expectations of dovish U.S. monetary policy as labor market conditions moderate and manufacturing sector growth remains in contraction. The yen strengthened to 143 against the U.S. dollar and gained for the second month in a row as the Bank of Japan retained its hawkish outlook. We now shift our attention to major stock markets markets in the US, Europe, and Asia. S&P 500 index and the Nasdaq Composite declined for the second week in a row after economic slowdown worries resurfaced. European markets halted a three-week rally amid a rate path and global economic slowdown worries. The Nikkei 225 stock average plunged more than 6% after the rising yen and weakening U.S. tech stocks dampened the market sentiment. Hong Kong indices struggled amid weak economic data, an underwhelming earnings outlook, and a protracted property market slump. Indian market indices extended weekly losses, tracking global market weakness despite rising demand for stocks from domestic investors. Let us shift our attention to merger deals, market movers, and earnings updates from leading companies last week. Broadcom, the advanced chip maker, dropped 10% after the advanced chip maker reported better than expected quarterly results, but the company's current quarter revenue estimate fell short of market expectation. DocuSign, the e-signature company, reported better than expected revenue and earnings in its latest quarter. Topgolf Callaway said it plans to separate it into two companies: golf equipment and lifestyle businesses and entertainment businesses. AeroVironment, the defense contractor, reported better than expected revenue and earnings in the fiscal first quarter. Bank of America was in focus after the Warren Buffett-controlled Berkshire Hathaway continued to trim its stake in the bank over the last 2 weeks. Dollar Tree plunged 19% after the deep discount retailer reported weaker than expected second quarter results and lowered its full-year outlook. Dick's Sporting Goods, the sporting goods retailer, reported better than expected second quarter results and raised its full-year earnings estimate. Airbus and Rolls-Royce were in focus after Europe's air safety regulator ordered a precautionary check on some engines following an engine fire on a Cathay Pacific flight from Hong Kong to Zurich on Monday. Swiss Life Holding reported better than expected results in the first half, driven by strong performance in its asset management and insurance operations. Volvo, the Swedish car maker, lowered its sales and profit estimates for the year, citing a tough market environment and weak industry demand. Four leading property developers in Hong Kong reported a sharp decline in earnings in the first half, driven by large losses in property valuations. In the week ahead, investors are looking forward to the release of inflation data in the U.S. Consumer prices are expected to decline for the fifth month in a row in August, and producer price inflation is anticipated to rise 0.2% from the previous month. In Europe, European Central Bank is expected to lower rates by 25 basis points and release economic projections for the year. The Eurozone's trade balance and final reading on inflation in August are also on tap. Investors in the UK are awaiting the updates on unemployment rate, trade balance, and industrial production. In China, the focus is on international trade balance, consumer and producer price inflation, and new bank loans data. India's inflation is likely to stay below the 4% upper end of the range set by the Reserve Bank of India. You can review daily U.S. and global financial market news, stock movers, earnings releases, regulatory filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on redera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see you